What's up, everyone? We have a filing out of the NYSEArca. Now, this is a filing that's came out before on different exchanges, so I'm just going to go through this slowly. Basically, currently the exchange's fee schedule provides specific fees and credits for agency orders that originate from a natural person and are submitted to the exchange by an ETP holder. And an ETP holder is an exchange traded permit holder. Basically, what they're doing is this is a new rule 7.31-E that's amending the retail order modifiers. And again, this is just reiteration. I've already covered this several times. It's specifying that an ETP holder would be required to designate an order as retail in the form and or manner prescribed by the exchange. And basically what that manner is it's not from a trading algorithm. And the ETP holder must obtain an annual written representation in a form acceptable to the exchange from each broker-dealer customer that sends its orders to be designated as retail. That entry of such orders as retail will be in compliance with the requirements specified by the exchange, and monitor whether its broker-dealer customer's retail order flow meets the applicable requirements. So let's get the terms here. So proposed rule 7.31-E would specify that an order designated with a retail modifier is an agency order or a riskless principal order that meets the criteria of FINRA Rule 5320.03 that originates from a natural person and is submitted to the exchange by an electronic trading permit holder, provided that no change is made to the terms of the order with respect to price or side of market, and the order does not originate from a trading algorithm or any other computerized methodology. So this will be implemented on the NYSEArca, which is a very, very high volume options trading venue. So yippee-yi-yay, that'll be registered or published on the 7th of February, which is Monday, and it should go into effect immediately because it is a filing of immediate effectiveness. Yippee-yi-yay, let's go to the moon.